Okay, hello guys. Hi everyone. Hope everyone had a nice weekend. Rest a bit, enjoy a bit. Let me know on the chat if you hear me well and if you see me. As usual, Monday we will make a weekly forecast regarding the market, Forex market. We will talk a bit about gold and silver as well. And see what's happened during the last week. Going to be very interesting. Hi, Joe. Hi, Adewole. Hi. Hi, Hedam Lee. Good morning, Richard. Oh, yeah. Okay, let's start. Before I start, I just want to remind what's happened last week, especially on the dollar index. We see that the dollar index exploding on the upside, actually reached the 104 levels. I will show you on the chart, but that's a zone that we might expect a little slowdown. You know, I don't expect after a huge movement on the upside to break it straight away. So there might be some opportunities this week on the dollar. Can be on the euro dollar, can be on the pound dollar, for example. And the dollar yen is still very complex and very complicated to trade, as the yen is very weak and the dollar is very strong. So the trend is very clear. But if you go to pairs that there is like a balance and a good equilibrium point, it's going to be very easy and more easier to trade. Okay, I will show you again the chart of dollar yen for people that didn't wear with me last week, but very complicated to make to or go with the trend or to trade on the opposite way. You don't know where it will stop. So let's start by the chart of the dollar index. Here I want to show you the chart. Okay. So you should be able to see the chart here. This is actually the monthly chart. As you can see, so last month, because actually we start the month of May, but you see in April what's happened here. Huge movement on the upside on the dollar index. This means the dollar gets stronger and stronger. But you see, it reached actually the 103, 104 levels. You know, starting the small rejection. For me, this is not enough to say, okay, this is the end of the uptrend. But you see, this is actually a strong demand created. If I go to the daily, even maybe to the weekly, we can see even more clearly on the weekly. But you see, last week, huge movement. Previous week as well, we had a movement, but the last week movement was actually the stronger. And actually, you see, this was very healthy, okay, uptrend. And from here, we start to at least no sellers, okay? No one wants to sell dollar at this point, probably because of the inflation, also because of the hike in interest rate. Bonds as well are pushing up. So, you know, all the macro environments tell to investor that the dollar might be a good hedge against inflation, against what's happening in the world. But as a trader, you want all the time to be before what everyone thinks. So maybe here at that point we might see some some stagnation at this point. I don't know if the price, because according to the environment, I don't see the dollar getting back straight down to the, I don't know, 95, 90 levels, but at least it can make a short retracement. And what I expect for this week is to trade between this range, okay? It's to stay between here, maybe, I don't know, a fake out some point, come back here. But, you know, what I expect is a trading range for this week. If we don't have a special news or special event, you know, big news or big surprise, the market, after a long trend, start to slow down, and that's what I expect here. I expect to be traded between a range, and you know, it will, for me on the Forex market, brings me some opportunities, and maybe find a pair that is very strong against the dollar and go long with that pair, and we will try to find if there is some opportunity by that. But that's what I expect. You see, my mind and my psychology told me that after this long trend movement, I don't expect to see a straight breakout to 106, for example. Of course, we can make, you know, some extended movements, like some overextended movements, but at least I expect to stay for a few weeks here. That was from 2017 and then 2020 and 2022, a zone that was respected again and again. Okay, so this is something that we should check it every time. You should have the dollar index next to you. If you break it above, if you do some rejection, it will give you some signals on your pairs that you want to trade on the Forex market. I already told it last week, but I want again to come back and remind that we are in a zone that that might bring some volatility as well, but might be some stagnation and some type of slowdown, you know, here. So we will see what's going to happen next week. I want to move very quickly to indices. I know that there was a huge movement on the downside Friday. If we take the S&P, okay, so this is the weekly chart. I think all this movement here go back to this support level. That is still a strong level that hold for 1, 2, 3, 4. It's all for almost few times here. But you see, there is this level that is holding. Okay, this is holding. We are still at this zone. This can attract some long-term investors on the S&P. Same in the Nasdaq. We are very close of this type of zone. Very similar here. Okay, so this will be this zone. This will attract some buyers. Already attract on February after push to 4,600, and then goes back straight to this zone. I think the 4,000 zone here is a strong zone to attract people that want to invest in the long term. Again, we are not safe by getting your a breakout below. Okay, we can have a breakout below. I want to check what is the Fibonacci levels after the bottom of the COVID. That would be very interesting. Here it's the bottom of the COVID crisis. I want to check where we stand. Of course, the environment is different. Today we talk about inflation, about hiking interest rate. When we reach this bottom here, this was most likely because of the coronavirus. So two different things. I don't know what is actually inverted. Maybe I can start from here. Tracements. yeah, I don't know why it's actually inverted, but if I don't know if I do from here to here, this might be the 50. This might be like the 28 levels on Fibonacci. I don't know. Maybe you guys on the chat can check. I don't know why on TradingView it's not giving me the good scenario. Or maybe it's here. 0.5, 0.17. Yeah, I'm missing one. Okay, maybe okay. Maybe it's from here. Settings. Okay. I missed here. Okay, I missed the 38 levels. Okay, so the 30th level is here and the 20. Okay, we might still some get a rejection. Of course, the 50 levels Fibonacci here would be a strong zone. I'm not sure if we'll get here. It's still far away. It's 3,500 level. But still, if we get here, it's a strong indication for us. It was also the top of the COVID. So, you know, breakout and retest on the long-term pattern here. If I go to the monthly, for example, it's exactly the top here. So it's breakout and then we can make a retest. I have a doubt that we can reach again this type of levels. I believe that we can see a higher movement before. But still, the main thing to have in mind is the macro environment that we stand for the day and for the year. We are trading the market in inflation, high inflation, and it can bring some lower movement, at least. In my opinion, I'm not trading daily the indices. On the 5ers, we don't have indices. I want, and this is in discussion, but we hope that soon we will release indices in the 5ers. There you can trade Nasdaq, Dow Jones, S&P, and other indices. We are still checking the option. But personally, I'm not trading the indices as a day trader, but I'm still using those indices to invest in the long term. Okay, and if I want to invest in the long term, I will reinforce my portfolio at this zone that, you know, is still a good zone for buy in the long term perspective. It's few years from now. So it's still for me a good investment for a few years. Okay, I don't know if the price, maybe the price as a day trade will you know, react, giving us a short bounce for day traders. It will attract some day traders as well. But still high volatility. You will see on the daily chart here. Okay, this was Friday. You see that Tuesday and Wednesday, Wednesday and Thursday, the market react to this zone. Okay, so this is days 2 candlestick. Maybe we can see on the H1 even better. Okay, so all this movement was Wednesday and Thursday, and Friday, actually the market get down again to this zone. On the morning, it create, you know, yeah, the market didn't open. Yeah, the market opened. You see the market tend to consolidate a bit here at this zone. That is for me still a very strong demand zone. So this is for indices. Last thing that I want to show you is oil. And it will give me the main, I will give you on this trading room signals that will be for me like, let's say, A+ levels, an A+ signal that we can have on the dollar CAD, and I will make the connection just after. Okay, this is actually the daily chart on oil. You see the markets don't want to go below 95. This is a strong zone here. Oil is a low supply, high demand. Even we see that China has closed Beijing, and less transportation, less oil, because when there is no cars, when there are no cars, you don't need oil, and generally it reduces the demand on oil. But still, the 96 level here is very strong. There is also the war between Russia and Ukraine, and Russia is one of the main producers of oil. So that's why this still gives some movement. And this is also why the 96 levels here is still holding. There is still demand. There is still lack of supply. So that's what we see. And you see the market tend to make lower and lower bounds. Here, this was a high bounce, and then we reached to here, and then to here. It's making a lower high all the time. With the 96 that holds, it's like a triangle, ascending triangle channel, a big one. And at least I expect for this week to have the dollar, sorry, the oil eating a bit lower. If you go to the H4 chart, we will see as well that that there is this supply that is still continuing and still holding. You see first touch here, first touch, second touch, third touch with the trend line. Okay, so I expect at least to have a lower movement on the oil. We can touch here. Okay. Maybe we can reach, I don't know, this level. This will be like a day level. Also here, this will be the beginning of a demand. At least at the end of the week, we will stand in the triangle. At least that's what I expect. And let's move to the dollar card, because I think it will give us some opportunities on the dollar card as well. Okay, this is the dollar CAD, okay, on the daily chart. You see that this zone here at the 1.28, yeah, 1.29, let's say, is 1.29 is a strong resistance and supply level that holds from July 2021. We made a retest on February. We are starting again a new retest for this week. And for this type of chart and this type of signal, you have two things to check. Okay, you have the dollar index and you have the oil. Okay, the first things to check is the dollar index. If you see that the dollar index this week started to make a rejection on the lower side, okay, so it's moved from 103 to 102 and start to consolidating, the dollar will like give us a signal to make, let's say, a sell on this point. If you see that the dollar index is still rising and breaking out to the 1.5 to 105, 106, I want to show you what's on the chart, because it's very interesting. It will give us here first good signal. Okay, so no, this is not dollar index. Okay, if we see on this zone on the monthly chart that you see at the beginning of the month, also beginning of the week, if you go to the weekly chart, if you see that we start to make a rejection, okay, I will go with a sell on the dollar CAD. Okay, this will be my first signal and my first, let's say, macro environment I don't know, advantage to take off. And the second thing would be from the oil. Okay, if I see that oil, starting to I don't know, touch a demand and starting to move up, okay, I expect at least the dollar CAD to come back to its average price for more than a year at least. Okay, we see that if I bring a data of the dollar CAD from 1 year ago, from 2 years ago, this price here that is 1.26700, it's the average. Okay, you see that we go ups and down, and we all the time goes back to this line. Okay, this is the average price from 1 year ago. So I expect at least giving a short signal here to go short and touch again the average price approximately here. Okay, so this would be for me like one of the main interesting pair that I will have to check. We reached the extreme zone. Okay, this is the extreme zone for me. I will have to monitor what's going on the dollar index, what's going on oil. According to that, I will find some daily opportunities and see. I can actually start building my position for people that like and see how sometimes I'm making live trading. I don't like to open straight away all my exposure, all my risks. So what I will do is I will compound my entry. If let's say today it gives me the first entry to make, I will start to open, and maybe here this is not a bad entry to make. As we go stochastics over 80, crossing almost to 100. It can be here actually on H1 a signal for me, but I will compound my entry. Okay, I want to take the highest part that I can sell. I don't want to go my full risk from here. And you see that when this pairs goes to the supply level, generally it makes overextended movements. Okay, you have this movement here. Okay, that was a high pin bar, and straight go straight on from here. You have this type of movement here that is quite overextended but react well. And we have also here, you see that all the time it's make a high volatility when you reach the extreme, because when you reach some extreme points, there is more attraction for investor, there is more volatility. So that's why you want to compound your entry and to have the best average selling price. Just want to be sure here, I just want to remind you something. I will stop showing, but all the analysis and all the trading I want to take and all the signals that I'm trying to share with you guys is only from my point of view. So please be sure that you work and you trade according to your own risk management, according to your own macro environment, signals, whatever. But it's interesting. It's very important to, again, making a sort of disclaimer. I not let's say I'm confident by doing this type of trades, but if it goes to the other way or the other side, you should at least have a risk management that, you know, making a stop loss, averaging very well. Okay, so take this as your own responsibility. This is important to say, and want to remind that this is, again, my analysis. Some people also can expect here a breakout. Okay, I'm not telling the opposite. If the dollar index continue to rise, of course, we will see here a breakout. That's why you should have on the left side, if you have two screens, having the dollar index on one of the screens. There is a week down towards the average target level. What is your opinion on that week? Arnold, that's a good question. Yeah, this was actually last. You see, I'm not sure here it's the exact average. I'm not using current for trading. I'm not using quantitative trading, but we see clearly by high, okay, by only like visually, you see that the price all the time 10. This is like the average. If we have the market depth on the left side and you see like there is like some type of volume here, this is for me the average. We didn't touch the average, but it's still giving us like a push to the upside. It can also give us a signal to say, okay, here there will be attract some sell. Yeah, this would be actually here the average. Okay, this is also like all this trading, this trading consolidation here. Increase a little bit to average, and that's maybe here it's the exact point when we touch the average price. But yeah, that's a good point here that you remark. So that's why if I want to take some profit, at least it would be at this point, at the average. If I want to maximize my profit, the best exit would be here. Again, there is less probability in terms of statistics to go straight away to this zone. That's something that we can do. But again, take profit on the way when you can. Don't open straight away all the lot size that you want. Don't close straight away all the position. Okay, as a trader, you have to all the time compound your entry, compound your exit. You can, I don't know, let's say the market goes down here, I take my profits, and the market goes back here, and okay, I sell again. Okay, that's still I want to follow my plan, and the more you will follow your plan, the more it will work for you. So let's say the market goes back here. I take some profits. I see again that the price moved up again to here. I will, I don't know, increase my lot size. I will, I don't know, closing some break even. You have to be dynamic when you trade this type of extreme zone here. And if you are a day trader, I will try to answer the question of Joe. If oil rises, dollar CAD drops, or the other way around. Yeah, there is a negative correlation between oil and the dollar CAD. We see, like most recently, we see like this is not so much the case, because what is moving the market and the key driving assets that move the dollar pairs, like the dollar CAD, like the dollar yen, and like the euro dollar, is the dollar index. Okay, the dollar index is actually the main asset that you should look for. You see strong movement last week. Still oil is still moving. It's still compressing. You see, I just showed a chart just before getting the oil chart, but you see it's like compressing from 96 to 105. Oil is not pushing too much to 120, 130. We are still in the zone. But generally, if we are in a more healthy market and a less volatile market, when oil goes down, you will see the dollar CAD going up. That's something that you can read on Google. You can say why the Canadian economy is related to oil. That's something that you can learn from. I don't want like to talk more about the correlation between oil and the Canadian currency, but if it's something that it's very interests you, so you can go on Google, go on YouTube. There is a lot of analysis and a lot of articles talking about this connection. So yeah, I repeat, when the oil goes down, you will see the dollar CAD going up. Okay, let's check the dollar yen. I want to talk about the yen that was very challenging last week to trade. Okay, this is here the dollar yen, strong extended movement. I explained at the beginning of the session that that the dollar is very strong, okay, as we see on the dollar index, and the yen is very weak. Okay, so that's why you see this overextended movements. We're starting to see some sellers at some point on the daily chart. You see here the first wave of sellers came. You see here the second waves, and Friday the market, I think maybe Thursday, the market break out this you see this market let's say this market structure here, break it and had a retest exactly to that zone. I just want to show you the zone that we break out and we test this morning as well. Okay, this was the zone on the H4 chart. Okay, so you see we topped here. It's still a big zone, but it's always to show you how the market react and how the market waves behave here. You see first time, second time, high breakout. You see this huge demand that breaks, and generally when you have this type of breakout, personally I don't like to buy after the breakout. Generally, when you buy after this type of breakout, you come at the end. It's like coming at the end of the party. You don't want to be the last guy to sell. So if you see, it's breakout, I'm buying here. And actually, when you buy here, the risk management that you will have and the way that you will manage your position is very difficult, because at some point you will see a retracement, and that's what we see earlier. You see the retracement up to the breakout. So as a trader, you want to get the best point to buy, and the best point to buy would be exactly to this zone. Generally at this point on the early morning here. So that's the first thing, but still on the H4 chart, There is nothing to take care. It's only big uptrend. The main thing that I want to do, it's all the time finding the best spot to sell. I don't want to buy the market here. I know that it can be very psychological for myself, but I'm not. I don't want to buy anything here. See high volatility movement. We actually break this huge supply from 27, from 2015 approximately, and then we break it recently. But you have to take care of this zone. So actually, we are countdown on the let's say no man's land, because we stay between the two big supply that we have on the monthly chart. But again, we tend to see some pin bar here. Daily chart again. I want to show it was the first market structure. This was the second. So wave of sellers came. That's from an indication that okay. And again, what is very interesting here, it's how the dollar index will react. If the dollar index this week or the following months starting to go down from the levels that is from 103, we will see some type of movement on the dollar yen on the downside. And on the euro yen, that's quite the same. The euro is less weak, is less. It's not strong as the dollar, but if we go to the euro yen, we're already starting to have, you see some. This was the daily chart. You see overextended movements going back to the demand, and especially to the gap here. You see on the daily chart, there was a gap here. The market just react to this gap. So this is very interesting. If I go to the H4 chart, maybe we can see even better. Yeah, especially here. Very interesting here. This was a nice movement that we can have on very good signal from last week. For example, you see resistance, open on a gap, react first time, second time, and here especially also we react and we had a good bounce. So this is very interesting on the euro yen. So you have this strong demand, especially at the gaps. This would be the 135 levels, 135.34. Okay, at that zone. If I go to the weekly chart, even to the monthly, yeah, we are still in the zone here. We are still in the zone. That's not bad to sell. That's not even you see that the dollar yen is a very exponentially moving up. On the euro yen, we can have here beginning of a lower movement. It's starting to create like a head and shoulders as well. Here you see some structure. You have the shoulders, you have the second shoulders here, you have the head. Okay, this will be the neckline, especially at the gap. So try to have in mind this structure for the following week. Okay, try to have this structure. And of course, I think the target, if you want to open any sell position for the following week, this would be especially at that point that the market worked out. Okay, triple bottom after the triple top. Sorry, break it after the first touch, and then we can actually have a retracement and a retest to that zone. Okay, so that actually would be my my analysis for the following week. We break it above, we might have a retest to that zone. We might have a test to that zone, and again we have stochastics very extended for me. You have also for me on this week the best spot to make a sell would be here. Okay, if I go to the H1 chart, you see this movement here, and the H4 chart. This will be the best way for me to open a sell. But we see actually this morning that the market, making making a lower low, the lower high. You see the market react multiple times to this H1 chart. You have also here a supply. Okay, this was a yeah. You have some signals levels here on the downside. This support that reacted multiple times, break it below, and creating a fresh supply here. So this is here. Let's say that would be one of my first entry. My second entry can be let's say even here. Okay. Very interesting. There are some I expect some lower movement on the euro yen for this week. Can you touch on GBP, JPY, and GBP USD? Yeah, lucky. We will move to the pound yen because we are talking about the yen. So let's continue with the pound yen. I think the scenario would be quite the same. Okay. The pound yen in okay, quite the same, but you see it here. What's very clear. Yeah, quite embarrassing. Okay, I don't know. As a trader, I prefer like to see that the market, which especially the breakout and retest levels, actually didn't. So according to my plan and how I see the market, it would be very difficult for me to enter here. Okay, as I want to expect like a lower movement. But again, if you compound your entry, and if you say, okay, instead of opening here the full lot size, I will compound my entry. I will open, let's say, 30% here and 70% here. At least when the market bounced up, you will at least have some lot size in your position. Okay, so that's why it's very important when you find an area where you find good buying zone, compound your entry. It's very, very important. Okay, instead of going straight away the full lot size, compound, create your position. That's something I just an idea, but I think that you have to like creating your position. Meanwhile, the chart is moving is like a trading techniques that is more advanced. Okay, generally when you start trading, you want to open at one point, you want to sell at one point. At what's moving in the middle, you don't know how to manage. So you have to know, let's say, how to create your position. You want to belong on the pound yen, you have to create your zone, you have to create and manage all day and every day and each week, at least if it's continuing for the following week, your position. That's something very difficult in option trading. That's something you must do when I was an option trader, and all the time I had to create my position, building my position to at the end having my exposure that I wanted. I couldn't open straight away all the position that I want because the market doesn't give me the price I wanted for. And it should be the same for the Forex market. Okay, so let's move to the maybe weekly chart, maybe monthly chart. Yeah, so definitely here on the H4 chart, you see this is here a strong support zone that we react last week. Yeah, it's very, you see it compressing actually here, very compressing. So expect to have like a strong movement either on the upside on a breakout or is on the downside. Actually the market is compressing, but yeah, you actually kinda I will not sell, I will not buy here as we are in the middle. You see my Bollinger Bands here give me the average price for the last days, and you see we are exactly here on the daily chart. It's in opposite if you go to the euro yen, and if you go back to the euro yen, that might be different. No, that's it, we are still here. Yeah, you see here, I would be more comfortable to have a sell on the euro yen after you see this type of clear resistance. If you go to the pound yen, it's less clear. Okay, you have this supply, and you know it's less clear here. You have the middle supply. If you expect the yen to get a bit more stronger this week, like you have a macro signal that you want to expect, I would prefer to open a sell on the euro yen and not on the pound yen. Maybe because the pound dollar is giving us another review. So let's check about that. On the M30, you see very difficult to make anything here. If you're a scalper and you trade actually this type of session, this is a playground. Okay, you can respect. Actually, the London session open usually less volatile. You see, when you have this type of compression structure, you can respect actually the compressing here. Maybe that buying will not be banned on the short time frame. We have also this demand here. Actually, we break this uptrend line, but at least I expect the market to respect any demand that or here or here, at least. Maybe I can start by making a short scalp here. We'll see how it ends. Okay. Well, so I just opened a short buy position to scalp, actually live the market. And again, you see, I want to compound my entry here. I know that the market giving some pressure on the downside. So I will compound my entry. If the market breaks even more than that, I will go with this zone here to wave my second entry. But this is actually how the market react here. I want to get this movement up. Yeah, okay. That's not bad. That's a good entry. We'll see if the market continue. I want to close at least to the middle. Let's say here, this would be my average point for the M1. So we will continue. My stop loss, of course, will be before that. Okay, so you see, meanwhile, I'm making some interaction. I just checking the chart, checking that on the M30 there is high compression, low volatility. So I expect the market to respect those types of environment and those types of demand zone here, and it's quite moving my side from here. Again, the market can break after. I will enter here in any case. Pound Australian, we didn't talk about it yet, and the pound dollar as well. We're going to talk about the pound dollar. I just want to follow. It's a short scalp, so I have to check what's going on. Yeah, very interesting on the pound dollar as well. You see this zone here. Stochastics as well is very like below 20, starting to cross. That's something that we made. I made the back test also in live last week without like wanted, but let's say here when you see that stochastics is below 20, starting to cross, the market tend to make a reaction on the upside. Maybe here as well, when you see that the market went below here, it didn't work too much. Maybe here at work, for example. Not too much. There are some pairs. Okay, so on the pound dollar, this is not giving too much. It worked like 1 time over 3. But I see that I remember we had like the EURJPY that when when stochastics moved in cross below 20, it's give us a high potential on the upside. Here, if I move to the daily chart, you see very complicated to have anything. The dollar is still very strong. So again, have a look for the dollar index the following week. It's very difficult here. Yeah, you have here, for example, the M15 chart that started to respect to the demand earlier. If I go to the H1, this will be also a good zone here. This will be the 2 main zone, for example, for the following week. Okay, this can be here, the inflection point. Can be. Could be. Very interesting. Maybe this one would be like a play also to make, to at least expect a buy here at this point. Okay, this will be like the 3 main zones. So this will be like on the H1, like for the following days, this week that you should look for. This supply zone that we tend to expect according to the dollar that is very strong recently. And of course, this zone, the bottom point. I want to check on the euro yen. It was not on the yen, it was on the pound yen. If we reach, so we see it make a short movement up, went to the downside. We didn't reach yet my demand. Yeah, the yen is starting to moving lower, still on the dollar yen. You see, that's why the yen is pushing a bit down. The yen is starting to trade. Well, here I didn't touch my second entry point. Anyway, let's move to the pound Australian meanwhile. And this will be the last burst to review together, guys. Pound Australian is very interesting as well. Okay, see this respect actually this demand. There was a this is Harrison here. You have a doji dragon here. If you don't like the meaning, you have a doji on this weekly chart, especially on the demand zone after a huge volatility movement. So this was here a nice indication for us to make a long at that point after this the week closure. And on the daily chart, this was a very clear inflection point here. Okay, this looks here very strong, and you see the markets make lower movement but starting to respect. Okay, here the market don't want to go lower than this zone, so it would be, let's say, more okay, this would be here. This would be here a nice zone to make a buy. At least we go this morning close to this top. That can be also a supply to respect. But at least when I go to the daily chart and if I go to the weekly chart, this looks very good. This looks very good. Again, a bit sad that I didn't was in front of the screen when this touch actually. I don't know if you hold the buy position or if you want to enter the market. If I want to do something like day trades or any scalp or any short-term speculation, I would opt for a sell here. Okay, you see it creates a strong demand, and we have actually touching this. Okay, so you're selling on the. I believe it's going to be a. Okay, so it's going to be a day trade. Okay, that's not bad. That's not bad. If you have a stop loss very tight, I can also expect a a short-term movement on the downside. But you have still to have in mind that on the daily chart, on the weekly chart, it's look a very good potential to continue after buyers came here to this demand to go again to, let's say, this supply here. Okay, this would be an indication. So this was for the pound Australian. Let's move back to the pound yen. Dollar yen, pound yen. Yeah, this is the zone. I just missed the zone maybe here. Okay, we are very close of this demand here on the M5 chart. Probably I missed my second component entry, but still I'm in. I will check if the market can go back from here. It's a bit sad that I missed it here, this second entry. Anyway, this would be the last way to see. Never mind. Okay, I missed my second entry. Maybe the market can react to retrace in order to attract this point. Okay, I will stop here. Okay, guys, thank you for being with me today. It was very, very interesting. I like actually what we did today. Very interesting dollar index, and then we move to oil, and then we move to indices. Going to be a very interesting week. Remind the dollar CAD signal that we can look for. I think it would be a key index, a key pairs for this week. So check out the dollar CAD. And yes, I wish you a nice trading week. Be careful, use your risk management. Again, the dollar is still continuing on its way, very strong recently according to the inflation. So again, I invite you to come tomorrow for the next trading room. Probably Saul or Yaniv will make it. So meanwhile, I wish you a nice day and a nice week. We stay in touch for next week, guys. Bye-bye and have a nice day.